Good morning and welcome to the Killik & Co market update. It's been another very choppy week for markets following the fairly significant falls that we had last week. Markets this week got off to a fairly negative start following the announcement of some further coronavirus cases across Europe. Later in the week we had a surprise announcement from the US Federal Reserve saying they were cutting interest rates by 50 basis points or 0.5%. Theoretically, lower rates are good for markets. They discourage saving and they encourage borrowing and spending, so they tend to be good for the economy and therefore good for the stock market. So when this was first announced, we saw quite a significant bounce in global stock markets. However, later that same trading session, we actually saw markets moving lower. And I think there were a couple of reasons for this. One, I think investors started to think about why did the Federal Reserve feel the need for such a large interest rate cut? And I think that actually started to cause a bit of concern. And secondary, I think people thought, yes, interest rates tend to be good for the economy, but what can they actually do to help cure a virus like the coronavirus? Now, following this interest rate cut in the US, we have seen global bond yields moving lower. If you have a look at this chart here, you can see that the 10-year US government bond yield is now just 0.82%. That's an incredibly low yield. Also in the UK, the 10-year bond yield is 0.29%, and that low rate suggests that markets are expecting a cut in UK interest rates as well. Now, what's the impact of low bond yields? It does present a real dilemma for investors. Historically, more cautious investors would have had a large proportion of their portfolios invested in bonds. But at the moment, the returns on bonds are so incredibly low, they're not even getting close to the rate of inflation. So investors invested in government bonds would really be losing money in real terms over the longer term. So this does present a real difficulty for investors, and it perhaps is forcing some investors to take a little bit more risk than they might like to do. And also this week, domestic airline Flybe has fallen into administration. Clearly it's sad news to be losing a domestic airline, but many investors and market participants are actually quite pleased the government has decided not to bail out a failing business. Last month there was some talk of the government offering Flybe a loan after these troubles first became apparent, and I think there was quite a backlash from other airlines in particular about this unfair level of state support. So I think many are actually quite pleased the government has decided not to do that. Now, there is a lot of thought among the industry about the fact that low interest rates have caused a number of very inefficient firms to remain solvent. Lots of firms aren't doing particularly well and do have fairly high amounts of debt, and these current low interest rates that we have do allow these firms to keep operating. And actually the low interest rates that we have been blamed for allowing a lot of these so-called zombie firms to remain solvent, and this, according to many, has led to a fairly low rate of productivity within the UK. And finally this week, Joe Biden is back in the running for the US presidential election, following a very strong performance at Super Tuesday this week. And this has actually caused quite a movement in some healthcare stocks. Previously, Bernie Sanders was quite far ahead in the polls, and one of his key policies is Medicare for all, and that would all but wipe out healthcare insurance within the US. Therefore, as he moved ahead in the polls, it was bad news for healthcare insurance stocks, and we have seen some quite severe weakness in the price of those. However, this week, as Joe Biden has moved further ahead, we have seen quite a significant rise in the share prices of some of these stocks. Have a look here at the share price for United Health Group. You can see there has been quite a significant bounce this week. And this particular scenario reminds me of back in 2017 when Corbyn was moving ahead in the polls, and that actually had quite a profound impact on some of the prices of the utility stocks that he wanted to nationalise. So definitely a situation here to keep an eye on, and we are looking ahead to November when this US presidential election will take place. And taking a look at the corporate calendar for next week, we have got results out from Standard Life Aberdeen, Deutsche Post and Prudential. That's it from us. Have a great weekend, and we'll see you next Friday.